So, Assalamu alaikum. Have a good day. It's the January 2020. So here, January 2020, number one. In the number one is 3 where 4, and 12. So 4 is working capital management. Deal with decision regarding the approximate mix. Same thing, same question, just one or two question before. Asset current liability. As a finance manager of a listed company, how can you maximize your company's profitability? It also the another question that one or two or three times comes here. While preparing project report before client, you have collect the following fact: estimate net working capital required for the project. At 10% of your computed figure, allow the contingency. So from this figure, we have to calculate the working capital. So if we go further to the answer, look here, the same answer as previous week, working capital. So we can say that a working capital management deal with decision regarding the appropriate mix and level of current asset and current liability. And also we know the working capital component is inventory, receivable, current asset, payable, other liability, etc. And we know that determine the working capital, there are different factors, internal factor, external factor, the influence for the taking good decision making. And number two, a firm's finance manager listed company. It is your question. As a finance manager of a listed company, how can you maximize your company's profitability? So you can maximize your company's profitability by this way. Finance involved managing the finance, firm's money. The financial manager must decide how much money you needed and when you best use the available fund and how to get the required financing. So this is this way that means maximize the value of the firm or company. The main goal of finance manager whose decision often the long-term effect. So this we can resolve. And if we go for the working capital, this is the working capital, 12 marks. Estimate cost per unit, raw material, taka 80, direct labor 30, cost per unit, and direct labor, the overhead, excluding depreciation, taka 10, 60, total 170. Additional information, selling price 200 per unit, level of activity 104,000 unit of production per annum or per year, raw material stock average 4 weeks, that is 1 month also, work in progress assuming 50% complete stage and respect to the conversion cost 100%, completion respect to material average 2 weeks, finished goods in stock average 4 weeks, credit allowed by supplier average 4 weeks, credit allowed to debtors average 8 weeks, log in payment of wages average 1.5 weeks, cash in banking expected to be 25,000. You may assume the production of the carried eventually of the year, that means 52 weeks what's working day, and eventually the year the production is happening. The wages and overheads are similar. All seller credit basis only, no cash sale here. So here 12 marks. Your answer is this one. Very much easy. We can write this way only current asset and current liability. And you can denote current asset by the A and B current liability. So here raw material is stock and total number of unit, that is total, and 80 weeks. You are taking the weeks. 80 taka, 4 weeks. Raw material 80 taka as question, as per the question said, raw material required taka 80 per unit. So here 6,40,000. And work in progress, raw material 100%, direct labor here, direct labor and overhead taking 252 weeks. So here figure comes here, the finished goods stock, that means 170 is finished goods, 4 weeks have to keep. Debtors 8 weeks benefit, debtors for the 8 weeks, cash in bank required 25,000. So total investment in current asset 52,45,000 Now current liability. Creditors for 4 weeks. Is come 6,40,000. Payment of wages 1.5 weeks. 90,000. So total current liability, that if we minus current liability from the current asset, then we'll get the net working capital. That means current asset minus current liability, 45 lakh 15,000. And also, as per the question said there, 10% contingency on the here net working capital. So 45,000, 15,000 multiplied by 10%, we'll get 4,51,500. So adding with that 45,000, 45 lakh 15,000, we'll get net working capital required 49,000, 66,500. So your answer is finished, 12 marks. And if we go question number 2A, how are net capital, liquidity, technical insolvency are risks related? So answer is that first we have to understand what is net capital, working capital is the difference between the current asset and current liability. We know it. And what is liquidity? Liquidity refers to how easily an asset can be converted into cash without affecting its price. And what is insolvency? Refers to when a company does not have enough asset to pay off all its debts. And risk is the responsibility of losing an investment due to uncertainty, deviation from unexpected outcomes. These all are related to the net working capital measure, liquidity determination, whether a company is solvent or insolvent, in which case risks occur, when is the possibility of losing the investment. So here risks occurs. Net working capital calculate this way. So here said that how. So here said that this way. And number 2B, what are the capital budgeting evaluation technique? Describe. So capital budgeting evaluation technique, this one. Just we know it. Payback period, discounted payback period, net present value, accounting rate of return, or average rate of return, internal rate of return, profitability index. Also, you can say the modified internal rate of return, etc. And briefly describe just what is payback, what is net present value, what is accounting rate of return, what is internal rate of return, profitability, how we decide it. Because if NPV positive, then we take it. And number 2C, also 12 marks. This question come from capital budgeting. ABC company is considering a project that would have an 8 years life and require 24 lakh investment in equipment. At the end of 8 years, the project would terminate and the equipment would have no salvage value. The project will provide net operating income each year. Here, sale 30 lakh, variable expense 18 lakh, contribution margin 12 lakh, and also expense, that means advertising, salary and other. Here, out of pocket cost 7 lakh, and depreciation taking 3 lakh. So 10 lakh minus, then net operating expense come 2 lakh. And the company's discount rate is 12%. Here 4 requirements. Compute the annual net cash inflow from the project. From this project, have to calculate the annual net cash inflow. And compute the project net present value if the project acceptable. Is the project acceptable? Compute the project payback period. Compute the project simple rate of return. So here 4 items, 12 marks. This is the solution. Number 1, the annual net income inflow cash, compute with the deduction the expenses. So sale minus variable expense, we get contribution margin, and advertising other, we get expense, if we adjust, we'll get 5 lakh is here. Here annual cash inflow. Also, we can calculate this way: net operating income. If we add the non-cash deduction depreciation, we get 5 lakh. Same way. And number 2, NPV calculation. New machine cost 24 lakh, PV factor 12%. As the 0 year, it is 24 lakh. And annual cash flow 1 to 8 years, same way 5 lakh that we calculate here, and multiply 20% factor 4.968, we get 24. So net present value is 84,000. Your answer, yes, the project is acceptable because it has a positive net present value. Now the formula of payback period, আমরা জানি if payback period investment divided by annual cash flow, so 4.8 years is payback period. And the formula for the simple rate of return, annual incremental net operating income, initial investment. So annual incremental operating 2 lakh, initial investment 24 lakh, multiply by 100. So your answer is finished. Now 3. What are the different types of taken over? So there are different types of, basically 4 types: friendly taken over, hostile taken over, then reverse taken over, then backflish taken over. All these all describing here, all thing we know the taken over what is. And now another question, merger. What are the different types of merger? Discuss the advantage, limitation of merger. So firstly, we know the what is merger. Look here, it is the merger. One company plus one company is go for another new company. So it's merger. Types of merger, different types. Here is the picture. Programmable merger. This was 1, 2, 3, 4, 5 types of here. Some merger are horizontal, some are vertical, some are whatever, etc. Different types of merger. All merger is here. And advantage is, what is advantage of merger? So there are different types of advantage. Huge advantage, it is that market share can increase, reduce cost of operation, revenue and profit growth, expansion operation, new geographical, new area, new country, etc. It is the advantage. And these disadvantages, a bigger company can become a monopoly in future. Another disadvantage, merger could be thought communication, coordination between the employees and different culture, etc. is the disadvantage. So merger could be very important part of any business strategy. So in the question 3, look here, taken over 12 marks. Question 3C, same math will come July 17. Question 5A, 12 marks. Same math, no change. So here, taken over, question number 3C is the your exam is January 20, same math, July 2017. And this is the answer. Question is this one. C. Company X wish to take over Y. The financial deals with the two companies are equity share 1,50,000, share premium account 2,000, profit and loss 38 and 4, preference share 20,000, they are nil, 10% debenture 15,500, 5,000, and fixed asset. And this way, all thing here are market price, equity share 24 and 27, price earning ratio 10 and 9. You have to do things. The company X could make company Y terms of exchange ratio based on net asset value, earning per share, market per share, etc. So another thing, what method would you prefer from company X point of view? So there are three method, exchange of method. One is net asset, based on net asset value. Another exchange would be based on EPS, another market price. So which one will be right? So this is the question. Exchange ratio based on net asset value. Here fixed asset, both company taking net current asset, total asset, preference share, and less dividend asset, net asset come 1,30,000, here 56,000. So number of share here 10,000, here 5,000. So if we divide, then got net asset per share 13.80 and here 11.20. So exchange ratio 11.20 divided by 13.80 equal to 0.8116. It means that the exchange rate would be the shareholder of company Y should get 0.811 number of share of X Limited for every share held by the shareholder of company Y. So this is the exchange rate. And number two, exchange ratio based on earning per share, EPS. So earning after tax 24, here 15. Number of share 10,500. So EPS 2.4 are here 3. What would be the exchange rate? So exchange rate, that means EPS of company Y divided by EPS of company X. So here 1.25. It means that the shareholder of company Y should get 1.25 share of company X for each every share held by the shareholder of the Y Limited. It's okay. Now that means C, exchange ratio based on market price per share. So market price per share of company Y is 27, and if we divide the company Y's market share 24, we'll get 1.125. It means that the shareholder of company Y should get 1.125 share of company X for every share held by them. So three exchange ratio, three exchange. So what would be the most benefit for the company X? Here, the exchange ratio based on the net asset value of the company is the best option for the X company. So what about the first one? It is the 0.816 share should be issued for that means a company Y. It's okay. Another question 4. What are the external techniques of foreign exchange risk management? So external techniques are future, forward, option, swap, etc. This is the answer. And describe the reasons for issuing a stock dividend. Which is better, cash or stock? Logical question. So first have to know that what is dividend, and dividend can be paid as stock and dividend. Reason for paying the stock dividend, that means reasons for issuing a stock dividend. Reason is that shortage of cash, or can be invest the amount for more profitable item or new expansion, etc. That's why cash is that means not encouraging the cash and giving the stock dividend. And who is better? It depend on the two scenario. One from the investor. Investor wants the cash dividend. So cash dividend is better for the investor purpose. But company's purpose, company do not want to liquid amount pay to the shareholder. And company wants to keep the amount within the organization and go for new expansion for better future. So that is better for the company purpose. So logically we cannot say directly that one. And if we go for number 4, 10 marks is the dividend policy. If we go for the question, here only answer, look here, very small answer, 10 marks, 5 and 5. The shareholder fund XYZ of the year ended 31st March, particular company X 12% preference share capital 1 lakh, equity share capital 100 is 4 lakh, share premium 40,000, return earnings 3 lakh, total 8 lakh 40,000. The earnings available for the equity shareholder from the prior operation as taka 1 lakh 50, which have been include the parts of the 3 lakh return earnings. So within return earnings 3 lakh, here apart that period operation, that means earnings available the 1,50,000 within that amount. What is the maximum dividend per share? That means maximum dividend per share. What if the firm has 60,000 in cash? What is the largest dividend per share can be paid without borrowing? So to answer, 5 multiplied by 2. Look, maximum dividend per share is come 75. Maximum dividend without borrowing, taka 50. How come? Cash available 60,000 divided by number of equity shareholder. And the maximum dividend is total distributable dividend 3 lakh. If divided by number of equity shareholder 4,000. So 4,000 come 4 lakh divided by 100. So 75. It's okay. And now question 5A. What is optimum capital structure? Discuss the component of debt. So what is optimum capital structure? We know it. And the component of debt here, the optimum capital structure of a firm is the best mix of debt and equity financing that maximize a company's market value while minimizing the cost of capital. So this is the fundamental thing for optimum capital structure. And another thing, discuss the components of cost of debt. So components of cost of debt is here. The cost of debt is the effective interest rate, bond, cost of debt often refers to profit before tax, etc. etc. And question, value of firm and weighted average cost of capital calculation, 6 marks. So here's the solution. And if we go for the question, assuming no tax and given the earnings of before interest at 10%, the equity capitalization rate below, calculate the total market value of each firm. So here, 4 company is earning before interest tax, interest and equity capitalization rate is here. You should also require to determine the weighted average cost of capital of each firm. So here, 4 firms. And another one. These 4 firms, W, X, Y, Z. Earning before tax putting, less interest, then we'll get net income or earning before tax. Here, equity capitalization rate 12%, 16%, 15%, 18%. Value of equity, how it's come? Value of equity net income divided by equity capitalization rate. So here come value of the equity, 15 lakhs, 15 lakh, 20 lakh, 20 lakh. And value of debt, we can calculate is interest divided by cost of debt of 10%. It comes 2 lakh, 6 lakh, 20 lakh, 24 lakh. Value of firm, that means value of equity plus value of debt. Totally value of firm, W is 17 lakh, X 21 lakh, Y 40 lakh, Z 44 lakh. And weighted average cost of capital, we can calculate earning before interest tax divided by here value of the firm. Then we get 1176 14, 29, 12, 50, 13. Under NI approach, increase debt, etc. So here calculation the weighted average cost of capital of 4 firm. Now 5C, another math. This math is last in this question, and number 6 is theory. So this one, the 8 marks. The Deshi Company Limited has to make the choice between debt issue, equity issue for the program structure position. So here debt is the same math we calculated just one or two, that is two exam before, same math. Just we call it same math comes. So look here in this year, 2 or 3 question come from immediate first. This one we calculated. Look, same answer, same math. Previous also it is the 8 marks also. Okay. So here the working note also same working note, same thing. Comes from designing capital or chapter of capital structure. So if we see the math here, one company has to make a choice between debt issue and the equity issue. So here between debt and equity issue have to make choice for the expansion program, and its current position is that 5% debt, equity capital taka 10 per share, surplus 30,000, total capitalization. So look here, this is the total capitalization, include debt, equity, surplus of fund, result of general reserve, because all item owner of the equity holder. This is the figure. And if we see the sale, 3 lakh, total cost 2,96,000, earning before interest tax is 31,000, and interest 1,000, earning before tax 30,000, and paid the income tax, that was 10,500. Then income, earning before tax, income, that would be the after tax. Income after tax 19,500. This is the scenario, and few additional scenario here. The expansion program is estimated to cost 50,000. So new expansion, if the financed through debt, the rate of interest is new debt is 7%. And look here, old debt as within the balance sheet 5%. But new debt, we have to take 50,000 or 50,000 million, it can be, is 7%. And the price earning ratio will be 6. So this figure we have to consider for choose the which item we have to take debt or equity. And if the expansion program is financed through the equity, new share can be sold netting 25 taka per share, and the price earning ratio will be 7. But the debt price earning ratio is 6. The expansion will generate additional sale 1,50,000 with the return 10% on the sale before interest and tax. If the company is to follow a policy maximizing the market value of its share, which of the following should be choose? That means which item, how they invest it. One is equity or debt. So if we go look here, the answer, this is a chapter of designing capital structure, 10 marks. Here answer is that. Financing plan, they have the two plans, 7% debt and equity issue. Earning before tax as given in the question, 46,000. This is that, this one. Okay, look here. So we have to calculate this one first. That's why we are working note. Present earning before tax 31,000. This one. Earning before tax 31,000 plus expected earning before tax 10% of 1,50,000. This one, new one. 10% of 1,50,000. So total 46,000 earning before interest tax. So this is 46,000. From 31, now 46. So 46,000 earning before interest tax in the both case. Less interest, 4,500, because rate of the interest, how come? Presently, interest is 1,000. And if we go for earning, that means debt, 50,000 at the rate of 7%, that would be 3,500 plus 1,000 previous. So 4,500. And in the case of equity, only previous interest have to calculate, only 1,000, because the 50,000 financing through the equity. But here, through the 7% debt. That's why here interest is more than equity. So here, earning after interest 41,500, and the case of equity 45,000. And tax, here we have to calculate there is no tax rate here, but we have to calculate tax this way. Look, income tax here saying 10,500. So 10,500 is the tax on 30,000. So if we calculate this, the rate will come, and applying that rate, we will get here tax 14,525, and here 15,750. And if we minus from that figure, we will get earning after tax 26,935 and 29,250. And now the EPS, earning per share. So how come earning per share? We have to say the number of share. What it come? Number of equity share with the debt financing. The number of ordinary share here. Look here. Number of ordinary share with debt financing. And if taka 10, so here 5,000 share. Same way. Number of ordinary share 5,000. 50,000 divided by 10. In case of equity financing, additional 2,000 have to issue. How? Look here, as per the question, they're saying that can sold netting 25 taka per share. So 50,000 divided by 25, then we'll get 2,000. So total number of share would be, that means here, look here, here 5,000 and here 7,000. So 26,975, if we divide with the 5,000 number of share, then we'll get. So another thing here, this 5,000 share come from here, equity capital, taka 10. So number of shares here. So if we invest in this with the debt, no need for issue, increase the share. So here 5,000 is come, earning an EPS come 5 taka 39 paisa. And here we have to divide it with the 7,000 share, because 5,000 existing and another 2,000 for investing 50,000 taka. So here if we divide 29,250 by the number of shares 7,000, then we will get EPS 4 taka 18. And price earning ratio, as said in the question, as mentioned in the question, price earning ratio is the here 6 with the debt financing, here 6 with the debt financing, and here 7 with the equity financing. So these 6 and 7, if we multiply earning per share with the price earning ratio, if we multiply, then we will get market value per share for the debt financing 32.37 and here 29.25. So what is the value of the huge higher value of the share. Here, basically, we say that here the company should choose debt from a financing to maximize the market value of a share. So look here, here market value of share increase if debt finance arranges. So the answer is here. So this one, and number 6, venture capital. What do you mean by venture capital? Venture capital is a form of private equity financing that is provided by venture capital firm or fund to startup, early stage, and emerging companies that have been deemed to have high growth potential or which have demonstrated high growth. So this is the venture capital, and venture capital here, a private equity financing provided by the venture capital firm or fund to a startup যেটা শুরু করছে early stage and emerging companies that have been deemed to have high growth potential or which have demonstrated high growth. Venture capital firm or fund invest this early stage company in exchange for equity or an ownership stake in those companies. তার মানে তার যে টাকাটা দিচ্ছে সে আসলে লোন ফর্মে দিচ্ছে না, ইকুইটি ফাইন্যান্সিং করতেছে এবং এইটা পরবর্তীতে ভালো অবস্থানে চলে যায়, যে ক্যাপিটাল মার্কেটে বিক্রি করে অন্যভাবে বিক্রি করে তারা বাইর হয়ে যায়। এটা হলো ভেঞ্চার ক্যাপিটাল। ট্রান্সফার প্রাইসিং. Transfer pricing is an accounting practice that represent the price that one division to company charge another division, or one company, one country to another country also. That's why our NBR transfer pricing policy introduced for but that means sometimes for foreign company they price their the transfer, for example their invoice, revenue, etc. they transfer this way. That price can be understated for one country, overstated for another country. So that the price that assumed to have been charged by one part of the company or produce or product and service it provide to another part of the company in order to calculate each division product loss separately. Because when we go for the difference reporting, for example segment reporting, you know it. So in segment reporting, in difference division, difference product maybe, so calculating that from one division, for example if you have the mill for you from the cotton, you make the thread. So cotton of one department, cotton is finished goods of one department, and thread is from the cotton, thread is finished goods for one department, and another department that thread is the raw material, and cloth is the finished goods. So transferring from one department to another department, their transfer can be within few profit also for the efficiency of that organized or department, or one company, one subsidiary company to another subsidiary company. So that's why transfer pricing comes here. So here look at the look one parent in the if you see the company that picture, the parent corporation, here subsidiary, another subsidiary giving the that means product or service to another company with this price. This is the price transferring one department to another department.
স্যার উদাহরণটা আরেকবার একটু দেবেন স্যার, উদাহরণটা একটু বাংলায় স্যার কাইন্ডলি।
এখন মনে করেন যে আপনার একটা কোম্পানি আছে, আপনার যে কোম্পানির কাজ হচ্ছে সে তুলা দিয়া সুতা বানায়। তুলা তার র ম্যাটেরিয়াল, এটা কিনে আনছে, সে এটাকে লেবার ওভারহেড দিয়া তার মেশিনে তার প্রোডাকশন করে সুতা বানাইছে। এই সুতাটা তার ফিনিশ গুডস। এই সুতাটার কিন্তু একটা সেল ভ্যালু আছে। সে যদি তার অন্য সাবসিডিয়ারি না দিয়া এটা যদি বিক্রি করে ফেলে, ওইটার যে কস্ট, ওইটার যে প্রফিট, এই প্রফিটটা সে ধরে নিয়ে সে আরেকটা তার কোম্পানি সাবসিডিয়ারি কোম্পানির কাছে এই সুতা যদি বিক্রি মানে নিয়ে নেয়, মনে করি একই গ্রুপে একই কোম্পানির ভিতরে সেপারেট না হইতে একটা ডিপার্টমেন্ট হতে পারে, একই জায়গায় হচ্ছে এর এই মেশিন এটা হচ্ছে, এই মেশিন এটা, এখন ওই ডিপার্টমেন্ট বা ওই সাবসিডিয়ারির এফিসিয়েন্সি জাজমেন্টের জন্য এখানে প্রফিটটা যুক্ত করে হিসাব করা হয়। কেন করা? এটা তার এফিসিয়েন্সি, এটা ওখানে না দিয়ে সে বিক্রি করলে মার্কেট থেকে এত টাকা তার ইনকাম হতো। এটা হলো সেগমেন্ট রিপোর্টে তখন লাগে যে এই সেগমেন্ট থেকে অথবা এই প্রোডাক্ট থেকে, এই জন্য যত কোম্পানি আছে যত প্রোডাক্ট আছে প্রত্যেকটা প্রোডাক্টের কিন্তু আলাদা আলাদা রিপোর্ট হয় যে এই প্রোডাক্টের পিছনে কতটুকু খরচ হয়েছে, কত লাভ হয়েছে ওভারহেড কস্ট দেওয়ার পরে, এটা সার্ভাইভ করবে কিনা, সামনে এটা কন্টিনিউ করবে কিনা, এইগুলা। এবং এই যে এক ডিপার্টমেন্ট থেকে আরেক ডিপার্টমেন্টে তার যে জিনিসটা পাঠাচ্ছে সাথে তার তার প্রফিটটা ধরে দিয়ে পাঠাইতেছে, ওইটা তার তখন পারচেজ প্রাইস। যেমন এই যে সুতাটা নিল আরেক ডিপার্টমেন্টে, সে যে হিসাবটা করে দেখাইলো ওই হিসাবটা তার জন্য পারচেজ পারে, কিন্তু কোম্পানি যখন একসাথে হিসাব করা হচ্ছে তখন কিন্তু মাঝখানে প্রফিট কিন্তু শেষে আসতেছে, কারণ এটা সে বেচে নাই, এটা ভিতরে রয়ে গেছে। কিন্তু ডিপার্টমেন্টের যখন এফিসিয়েন্সি জাজমেন্ট করা হবে তখন কিন্তু তাকে প্রফিটটা ধরে হিসাব করতে হয়। এই জন্য যখন সে এটার খরচটা ট্রান্সফার করে ওই ডিপার্টমেন্টে, তখন ওইটার ভিতরে ওই তার যে রেভিনিউর প্রাইসটা ধরে দেয়, এটাই হলো ট্রান্সফার প্রাইসিং, বুঝছেন?
জি স্যার, এই ক্ষেত্রে তো কিছু কিছু ক্ষেত্রে বোধহয় তো প্রাইসটা আরো বেশিও দিয়ে দেয় স্যার, বাইরে
হ্যাঁ,
বিক্রি
দিস
করলে
তার
তো।
প্রফিটের জন্য। এই জন্য
জি স্যার।
ওই যে মাল্টিন্যাশনাল কোম্পানিগুলি তার প্যারেন্ট কোম্পানিকে যখন কোনো কিছু দেয়, ফর এক্সাম্পল বা যেমন বাংলাদেশে আছে এইচজিএস, এখন এমন হলো এইচজিএস জার্মানি এইচজিএস বাংলাদেশের পক্ষে একটা কাজ করেছে, সেই কাজের যে ভ্যালু হয়েছে সেই ভ্যালুটা সে যদি এখানে চার্জ করে, ফর এক্সাম্পল এখানে দেখা হয় আপনি ওই যে খরচটা এখানে মানে কি ওই ট্রান্সফার প্রাইসিং গুলা যেই দেশে ট্যাক্সের রেট কম সেই দেশে প্রফিটটা বেশি দেখায় যদি গ্লোবাল কোম্পানি হয়, যেমন 50টা দেশে ওর অপারেশন আছে ওয়ার্ল্ড ওয়াইড। তো ঘটনা হলো এরকমের যে যেই দেশে ট্যাক্সের রেট কম সেই দেশের ওই কোম্পানিতে সে ট্রান্সফার করে, এখান থেকে করে কি করে ওইখানে প্রফিট দেখায় বেশি আর এইখানে দেখাবে প্রফিট কম, এখানে ট্যাক্স বেশি। যেমন বাংলাদেশে আপনার যদি এমন হয় ট্যাক্স সহনীয়, যদি এমন হয় যে না বাংলাদেশে তার প্রফিট সে কম দেখাবে, তাহলে কি হবে, তার একটা ইনভয়েস এখানে রেজিস করবে, এখানে বলবে এটা বাংলাদেশের কাছে আমার পাওনা, এটা ওর পিছনে আমার একটা খরচ হয়েছে, ওর কাজ আমি এখানে বসে করছি। হ্যাঁ, ওই ইনভয়েস এখানে পাঠাই দিল, এই খরচটা বুক করলো, এই খরচের টাকাটা কিন্তু ব্যাক করে ওরে দিতে হবে প্রপার চ্যানেলে। এটা কিন্তু ওখানে চলে গেল, ওখানে কিন্তু যেগুলো আসলে এত টাকা হয়তো হয় নাই, তাহলে এই যে পাঠাইলো যেটা এটা হলো হয়তো ইন্টারনাল অন্যভাবে অ্যারেঞ্জ হবে, কিন্তু এই যে ট্রান্সফার করলো এর ফলে কি হলো, এখানে এর ফলে কি হয় যে এইখানে প্রফিট কমে যাচ্ছে, প্রফিট কমে গেলে ট্যাক্স কমে যাচ্ছে। হ্যাঁ, এই জন্য এটা অথেন্টিকেশন করানোর জন্য এনবিআর কিন্তু আমাদের করা হয়েছে, ট্রান্সফার প্রাইসিং এর জন্য আলাদা একটা করছে, পলিসিও করা আছে, এবং ওইটা কিন্তু অ্যাপ্লিকেবল সব কোম্পানির জন্য, ফরেন কোম্পানি বিশেষ করে। So it is for transfer pricing. Capital retaining, retained profit, এটা হচ্ছে যে that means retained capital is the sum of the company's profit after dividend payment. Since the company inception, it can also be called retained earnings. So this one, and loan syndication, another question, a theory. So loan syndication is the process of involving a group of lenders and finding the various potential loan we know is the single borrower. So loan syndication and another merger of company. So there are different types of merger. We know the merger is an agreement that united two existing company into one new company. And another dividend payout ratio. The dividend payout ratio, the ratio that total amount of dividend paid out of the shareholder relevant and the income of the company. So dividend payout ratio, we can calculate this way, outstanding share method, dividend pay per share divided by earning per share. And earning method, we can say total dividend paid divided by total earnings. So this way we can solve our problem. So that another question we discuss. So we discuss here January 2020. Total solution is within here. So look here, and this math again come different. This one C 5C 5C here 8 marks, and this one also 3C. Also this working capital also come previously. 3 math comes from just immediate 2 or 3 exam before. So we discuss the January 20. This is all for today. আপনাদেরকে ধন্যবাদ, ভালো থাকবেন। ঠিক আছে স্যার?
থ্যাংক ইউ স্যার।
ভালো থাকবেন স্যার।
আর আজকে ক্লোজ করে আল্লাহ হাফেজ।
আসসালামু আলাইকুম।